the deadline. Been working all night. Imagination.
Okay, ladies and gentlemen, may we kindly invite you to take your seats, please. Okay, now it's my great pleasure and honor to welcome Minister of State, Mr. Alvin Tan, to Maybank's Invest ASEAN event. Minister Alvin Tan is Singapore's Minister of State for Trade and Industry and also Culture, Community and Youth. He's also currently a board member of the Monetary Authority of Singapore, Singapore's central bank. Minister is also a devoted Man United fan, and I'm sure Maybank would be delighted to host you at our private booth at the Old Trafford Man U Stadium. Minister Alvin, may we kindly invite you onto stage to give your address, please. Minister Alvin.
Hi everyone, it's good to be here on, what is it? It's a Wednesday morning. I was coming here earlier on and I thought that this particular place is quite magical for me. In the 1950s, my grandfather used to work here in Raffles Hotel. And he was from Hainan Island. He came from southern part of China. And as you know, Purvis Street and the part of Breach Road was the Hainanese Quarter. And he used to tell my family, he used to tell my mother and her siblings, or actually he used to tell me, and my mother used to tell me that when he was working here, he used to clean the toilets. And at the end of, when you shower and you clean yourself after that with a bar of soap, you usually leave the remnants behind. So in his time, what he used to do was to pick up the remnant soap, put it together, you press the soap together, and then into a ball at the end of the week, and that was the soap for my mother and her siblings. That was sustainability at that time, a circular economy, as it were. So it brings back memories. It's really a pleasure to be here, actually back in Raffles Hotel in many different ways. But today I'm not really about to talk about soap. I heard Prof's discussions about China, and I think there are many different areas in which we can explore. But maybe let me start. So I'll start by saying to Chairman Tan Sri Datuk Sri Zamzam Zarani, Muhammad Isa, Group President and CEO Datuk Khairul Ramli, the distinguished guests, ladies and gentlemen, it's really a pleasure for me to address this year's Invest ASEAN 2022 conference, which Maybank has kindly put together. When my good friend Andy invited me, I struggled to think, of what to say. How do we make sense of what has happened over the last 2 years, and how do we make sense of what's going to be happening the next few years? It feels that we've jumped out of a hot COVID frying pan into the fire of a hot war and also hotter planet. Now, the COVID-19 frying pan has exacted a significant public health toll. We discussed that earlier on our world. The US, for example, is almost 1 million deaths. But the WHO estimated that there were 14.9 million excess deaths associated with the COVID-19 pandemic in the last 2 years. And this COVID-19 frying pan in many ways, looks to be cooling now, with most countries living with the virus endemicity, opening up their borders, resuming some form of normal activity, like what many of us are doing. Of course, with some exceptions and also with some caveats. And the global economy started to emerge from COVID-19 towards the end of last year, 2021, and global growth strengthened in the last quarter of 2021 and then early into 2022. Why? Because there were rising vaccination rates. We talked about that earlier. It allowed most countries to shift towards some form of endemicity. And the connection between COVID-19 infections as well as economic activity also weakened significantly over time. There are clear improvements in the public health situation. It's also released a lot of pent-up demand, including in tourism, which I helped look after, but it's also reinforced by significant policy support. So it appeared all that after a very, very difficult 2 years in this COVID-19 frying pan, that we would get a break, that we would get a breather. But are we getting a break? Are we getting a breather? Well, yesterday, the World Bank estimated that world growth is expected to slow to about 2.9% this year from 5.7% in 2021. It's a dimmer prognosis compared to what it produced 6 months ago before Russia's invasion of Ukraine. So it might now seem that we are jumping from a hot pan, or forgive me, hot pandemic, to a hot war, hot prices, and a hotter planet. The hot pandemic and the hot war has indeed led to hotter prices. Due to the pandemic, the strength of expansion in the latter half of last year rapidly eroded spare capacity in many economies, and it also contributed to what we see as supply-demand mismatches. Now, the labor force participation has also in many countries fell due to people's concern for their health. They just don't want to go back to work, or they just stayed at home. In some countries, this reflected the large fiscal support provided during the downturn. Many countries provided that fiscal support, but it has also taken longer for workers to return to employment than many analysts expected about a year ago. And I mean, if you go around and you speak to many of the companies, they'll say, not enough people, not enough people, not enough people. And this is contributing to a tighter labor market. But there has also been many repeated interruptions to the production process, the transport in very specific industries. And this has also hampered the high or cross-border networks and led to higher costs and delivery times. So all your delivery, even the Apple MacBook is going to be a little bit delayed into July. Earlier on, Professor talked about China's zero-COVID strategy and the recent lockdowns in Beijing and Shanghai. And that's placed a heavy toll, not just on the people, but also production, supply chain, and also led to rising prices. And we've now seen the effects of the hot pandemic, and then now we're reckoning with a hot war. And the main impact of Russia's invasion of Ukraine has come through a sharp increase in food prices, energy prices, and it reflects how both countries role in global supply chains and the supply of all of these different products. All prices are up 50% year to date. Grain, fertilizer prices have also risen sharply and may stay high for an extended period. Even chickens are not spared the price hikes. So if you're eating chicken today, maybe you want to pause a little bit, try something else. But Khairi Jamaluddin was just here, and he said that the ban is unlikely to last a few months. We take his word for it. But in the meantime, we're making sure we find chicken from elsewhere. I just came from Mexico. We are getting other food sources as well. So these high commodity prices obviously come on top of already very high global inflationary impulses that emerged in 2021 and will further raise the production costs and also consumer prices. I was in the markets over the weekend, and I think a full chicken costs $7 now, up from about $6. And if you want kampung chicken, it's $11. So you decide which one you want. But overall consumer price inflation has also accelerated most sharply in the major advanced economies, where economic recoveries are actually more matured compared to Asia ex-Japan. So now we know about the hot pandemic, we know about the hot war, but let's also not forget that our planet is also getting hotter. Global temperatures have risen by 1.1 degrees Celsius above pre-industrial levels. Global greenhouse gas emissions are also rising. Why? Because as the global economy started to recover in 2021, we all began to use more fossil fuels. In fact, demand for coal has risen, and fossil fuels continue to account for more than 80% of global primary energy consumption. Bad habits stick. And as a singer-songwriter, Ed Sheeran, and many of you are predisposed to Ed Sheeran, he says, every time you come around, you know I can't say no. Ooh, 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 my bad habits lead to you. I want to sing it, but you know where we're coming from. You revert back to some bad habits. Despite these headwinds, there's some indication that global economic activity has not been derailed, at least that much. While manufacturing sector activity has remained resilient, global manufacturing PMI for May is 52.4, which is actually lower than the 53.7 recorded in February, before the war broke out. But it's still well above this 50-point threshold, which signifies overall expansion. But households have also some buffer against surging prices because many of you did not spend, you saved substantially during the pandemic. There's also some drawdown of these savings that could help to sustain household spending even during rough times. Let's now go to the growth in Asia ex Japan. Well, we expect it to stay firm. If you look at emerging Asia, the IMF expects a relatively firm expansion of 5.4% this year. Resilient final demand in the advanced economies will also continue to support manufacturing and trade in our region. And domestic recovery, demand recovery, which has so far lagged behind the advanced economies, will also likely underpin this growth that we are seeing. And although China's economy could slow even more than expected, policy makers there retain some considerable legroom for policy responses if required. What about global inflation? We all know about this. We see it in our food products and oil. We will expect it to remain high in 2022 because global commodity prices will push at least the headline inflation rates. And futures markets suggest the prices at the above 2021 averages to persist throughout 2022. Nevertheless, if we're optimistic, inflation should moderate next year. Major central banks have already expressed a strong willingness to do whatever it takes to restore price stability. The monetary policy tightening should keep expectations anchored and then arrest inflationary momentum directly, hopefully assisted by the supply chains progressively being eased and unblocked. If we move to inflation in the advanced economies, including the US, it could prove higher and stickier than expected, and inflation expectations could become unanchored, which could worsen the short-term trade-off between output and inflation, confronting policymakers. So what have major central banks done? Well, they have responded by withdrawing policy accommodation, and this synchronous rise in policy rates have tightened global financial market conditions, which many of you are more than familiar with. In fact, financial markets in the US and the Eurozone have begun to reprice assets to factor in the expectations of price normalization. So far, this global financial markets and the system has thus far absorbed this recent string of economic shocks and policy shifts without significant stress. But we are quite sure that vulnerabilities lurk in the background. What are these? Well, if you look at it, corporate sovereign debt has increased during the pandemic, partly because of debt moratoriums and then fiscal stimulus programs, which you see in many parts of the world, including the US. And if financial conditions tighten more sharply than expected, you can expect debt distress or other forms of market dysfunctions to emerge. But while these tighter global financial conditions, combined with commodity shocks, have been challenging for Asian economies in the past, there's a difference. Asia is now better positioned than during the taper tantrum that we experienced about a decade ago, a fact which many investors have also recognized. And most emerging, and how is this apparent and why do we say so? Well, I'll give you a few points. The first is most emerging Asian currencies have depreciated only slightly against the US dollar year to date. Two, we have not seen a destabilizing rush for exits by portfolio capital. And spreads on emerging Asia dollar bonds have generally also widened less compared to the broader emerging market indices. And within ASEAN, investor perceptions of sovereign risk have also been relatively benign thus far. The COVID-19 crisis has had just a transitory effect on Asian credit risk premium, and default risk for the sub-region has been declining since about mid-2020, restoring a previous long-term trend. What does that say about Asia? Well, it really speaks, if you look at the Asian financial crisis 97 and the taper tantrum, it speaks to how now Asian economies are better positioned. They've strengthened their macroeconomic fundamentals over the years, reduced fiscal and external deficits, built up their reserve positions, and established stronger and more credible policy frameworks. Then now let's bring it all back to Singapore. On the domestic front, Singapore has weathered the COVID crisis relatively well. In fact, the IMF, in its recent Article 4 consultations, annual Article 4 consultations, noted that the Singapore economy has recovered sharply from the pandemic, and it attributed it to decisive policy responses, impressive vaccine rollouts, and strong economic fundamentals, things that we try not to take for granted, and we're trying to make sure that we continue on. And as always in Singapore, we remain vigilant, keep a close eye on what's happening. If you look at the near-term outlook, it has become more uncertain. We talked about all of the different challenges, the hot war, hot prices, and the likes. It could also turn or dampen prospects for many of the external-facing sectors, which were pillars during the crisis, including manufacturing and also financial services. So we expect growth in these sectors to slow this year amid some pullback in external demand as well as in the business and financial market sentiment. But we think also that this should be offset somewhat by the substantial easing of domestic SMMs or safe management measures as well as the easing of border restrictions. We did that in about mid-March. And we expect Singapore's economy to come and growth about the lower half of the 3 to 5% forecast range that we talked about in 2022. At the same time, although we are very far away, Singapore is not immune to the hot war, the now less hot pandemic and hotter prices. And this will filter through and we'll see imported costs over the rest of this year and also possibly into next year. But we talked about this earlier. There may be some embers also from the COVID-19 pandemic that may flare up again. The winter months are coming and vaccine may wane over time. So be prepared for some surprises. So let's end on a more positive note. I feel a bit damp. What can we, with all of this hot stuff, what can we do to then cool or to bring down the temperature? If you don't mind, I suggest a few solutions we can work together on. The first is continue to make friends, diversify, invest in other parts of the world, continue to trade with one another. So to our Malaysian friends, bring the chickens across. Singapore is always looking to expand our trade links. I was in Colombia recently, then I went to Mexico. We're bringing in different kinds of food sources. But you know that we have also been signing different free trade agreements. RCEP, this is alphabet soup if you have on your tables. It's RCEP, we have CPTPP, we have digital economy deals with the UK, Korea, Australia, with Chile, with New Zealand. I was in Colombia to sign the free trade agreement with the Pacific Alliance with 4 countries. We are now negotiating another free trade agreement with Mercosur, which is Brazil, Argentina, Paraguay, and Uruguay. So we are keeping that net wide. In ASEAN, RCEP represents an important milestone for us. Why? Because it sends, in a very deglobalized world, it sends a very strong signal to the world that ASEAN is open, remains committed and open to free trade as we move towards becoming the world's largest economy by 2030. So make friends, do business. Second is to manage inflation decisively. MAS has been preemptive in tightening monetary policy, having embarked on the process since October last year. Now, the cumulative effects of the 3 rounds of tightening will help to slow the inflation momentum, and targeted fiscal support will also help more vulnerable households cope with higher cost of living and also help businesses to continue to push forward with upgrading and restructuring for the future. The third thing that we can do, in addition to making friends and also managing inflation decisively, is to commit to climate goals. Make sure that our planet doesn't get too hot too fast. How? Well, Singapore is accelerating our long-term climate change plans and also stepping up our 2030 goals. This year's budget laid very clearly that we are serious about it and is a priority for us moving forward. MAS is also playing a very active role in this regard, developing global and regional taxonomies and green standards, as well as building Singapore into a green finance hub. So we urge you to come and partner with us in this opportunity. Ladies and gentlemen, it's really been a tough 2 years, for many of us, and it's likely to get even more challenging. We discussed over the course of my speech how it appears we are jumping from a hot pandemic into a fire where we see hot wars, hot prices, as well as a hotter planet. But we also discussed how we could work together to help to cool many of these temperatures and how we can help them resume towards a sustainable growth path. It's been a tough 2 years, as I mentioned earlier on, but Andy mentioned earlier on, and you mentioned earlier on that I'm a Man U fan. It's also been very tough for the Man U fans. And I think Maybank is also a supporter, even though they have not done well. Thank you very much. But some of our colleagues in Parliament always say you never walk alone. I'm not going to say that, but I just want to say that there is. I was looking for an appropriate Ed Sheeran song to wrap up the speech, but I thought a better thing to wrap up is a Manchester United chant. I won't ask all of you to do it, but it always says this, that the Reds go marching on. And I hope that we will continue to march on, get past another of this hot war, hot prices, and a hotter planet, and we can all chart a future path to sustainable goal. So thank you very much. I hope you learn much more during this conference, and thank you for having me. Thank you.
May I now invite the VIP table to come up for a photo shoot with me?